Well, let's stay with resources, and Pilbara miner Fortescue Metals is under new management as of this week, with the FMG's Chief Operating Officer, Nev Power, taking over from the company's outspoken founder, Andrew Forrest. And the miner looks to be no less aggressive in its aim to be the lowest cost iron ore producer. Well, Nev Power joins me now from Western Australia. Nev, welcome to the programme.
Thank you, Tiki. Good evening.
I see from the RBA minutes today that there was talk of coal still struggling after the floods, but iron ore exports, they say, had already bounced back from the weakness seen in the March quarter. What is happening out there at the ore face?
Well, in the March quarter, Tiki, there was a lot of wet weather that we encountered in the Pilbara, and that impacted our production. But I'm very pleased to say that the June quarter has come back strongly. We produced 11.5 million tonnes in the June quarter, and most significantly, we're at a run rate of our 55 million tonnes per annum for June, which is the target that we'd set and a significant milestone for Fortescue.
And what's your outlook now for iron ore prices?
We see continuing strong demand and prices for iron ore, and particularly driven by China. The story coming out of China is that we'll see continuing strong demand there for some time on the back of continued urbanisation and construction.
I should interrupt you because there was another story coming out of China in the Financial Times overnight that China is underreporting the amount of steel that it makes by 40 million tonnes a year. That's the amount produced by Germany. Now, the consultants who've done this analysis, it sort of suggests that underreporting then drives the demand for iron ore, which is keeping up the high prices for you guys in the Pilbara.
Well, we've had a lot of discussions with our customers in China of recent times, Tiki, and I think there generally the steel industry is doing it a bit tough. They are seeing some softening of demand. But despite that, they're continuing to see a continued very strong future. Part of that cutback in demand in China was driven by a lack of components coming out of Japan for the Chinese car industry. So I think that there was some impact in production from that, but we see it continuing strong going forward. Do
you think there was that sort of level of underreporting, though? It's a big figure.
It is a big figure. I couldn't comment on that. We visit all of our key customers in China, and we see the production figures very consistent from them.
I guess you'd expect the Chinese to be strategic in these sorts of deals. Another bid by a Chinese company yesterday, the $1.4 billion bid for Sundance, has arrived. Now, do you see that as deliberate diversification away from Australia, given Sundance's African assets?
Well, I think China has made no secret of the fact that they are looking to broaden their supply base. However, having said that, the Pilbara remains a key supplier of iron ore into China. We are very close by in market terms and in shipping terms. We have very reliable supply chain, and we are expanding our production to meet that increased in demand. So while I think there'll be a broadening of that supply base, the Pilbara will continue to play a major part in that.
Talking about your expansions, you're now investing over $8 billion over 2 years in your two hubs and port and rail to triple output. The Wall Street Journal has described it as a risky new strategy. It is ambitious, to say the least.
Well, we have set very aggressive targets there, Tiki, and I'm happy to say we're on target both in terms of schedule and in terms of cost to achieve those. We're currently producing at 55 million tonnes per annum, and what we are doing is we are rolling on with a number of the same suppliers and vendors and contractors to continue to develop up to 155 million tonnes. So we are in the process right now of expanding the port and the rail, and I'm very pleased to announce that we now have the final approvals to commence construction at our Solomon hub, and we'll be turning the first sod there this weekend. That really is de-risking the 155 million tonne target, and we're very confident of achieving that.
There's no secret that Fortescue has struggled to get major institutional support here in Australia. Do you think some of that has got to do with the case against ASIC?
I think that people have had some difficulty believing that we would achieve the targets that we've set, Ticky. But what I'd say to that is Fortescue has consistently set aggressive targets and then achieved them. We have a strategy of having innovative plan A to try and achieve the best result that we possibly can, but we always back that up with a bulletproof plan B.
All right, well, I should also briefly ask you about the carbon tax and the mining tax, which we know Andrew Forrest is very strongly opposed to. Are you also opposed in such stringent terms?
The mining tax, Ticky, is a very unfair tax. It is targeted at a very narrow element of the resource industry, and it has been designed in such a way that it favours some companies over others. So we're not opposed to a tax per se, but the lack of consultation and the lack of broad base for this tax makes it very unfair. In terms of the carbon tax, it has a very small impact on Fortescue. But the only comment I'd make with that is that we need to be very careful of unintended consequences, and the carbon tax may in fact have the effect of driving energy-intensive processing industries offshore. So I think overall, again, not opposed to the tax per se, but we need to be careful how they're constructed.
Nev Power, wish you good luck this year. Thank you very much for joining Late Night Business.
Thank you, Ticky.